Welcome to TradeTheMBI.com. This is John. This report is for the 19th of June. So finally, this long, slow breakdown with this bearish orange above steel with the cyan tongue, our little snake that we described, mixed in with green below red, has just been trailing lower and lower, but it's been held up on ABM supports. Every time we've come to the ABM yellow, it's revisited. The other day we went to the magenta there and fought back. Clearly now we've made it all the way to the green ABM. 76%. This is why we put these numbers up, so that you're able to see them, because they have a dramatic, like a calling effect that they draw price action to them. Currently, it's pretty decent. Of course, it's all said to be about trade war, blah, 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 but we saw the handwriting on the wall long before any investor. Of course, all the people who were touting market meltdowns are feeling vindicated, but look, we just had a soft technical. This isn't a disaster by any stretch. It's a normal movement. It just, again, markets always fall 66% faster than they rise, so they always seem dramatic. And we talked about the NQ's probably going to have more pain than the S&P in general. If it doesn't, that'll be interesting, because that would show even more strength in tech, which would create an even bigger divergence, which also would have broader economy implications, suggesting that this idea that keeps being preached that the economy is nearing its end. Of course, we've been hearing this for now, several years, of course, and then when Trump came in, it was going to end it all, and that only caused it to accelerate. So some people say it's accelerating to burst, or, as I've been arguing, entering this similar era to the 90s, where boom, that just continues to rise and starts to build some momentum. The only thing that's going to derail it will be the Fed raising rates faster than can be handled. Of course, here we have the euro coming right back. We've been in continuation zone with this. Of course, we're finally now getting the steel crossing above science. That could be the beginning of the end here for this little dip. We still don't have a full buy, though. You don't have orange dip down far enough, nor do you have green rising, but what you're getting is a closing of the cyan to green, as well as the opening of steel above orange. So all of the bullish aspects are now starting to show up, so potentially we could get euro rebound, at least the start of it. Obviously, there's going to be a flight to quality for treasuries, so this market dip will probably give that a little bit of support. Oil fading. Well, it came back and revisited the lows. That was per this dip below the red line from back here. It's popped up a little bit. Nothing too dramatic. And then gold still suffering, though. You would think that with some of these warning signs for inflation that we're really seeing out there, that it would have a better impact, but not so much yet, even though there's quite a bit of central bank involvement. Now, this is where we turn to our 5K chart. It's very exciting to look at the setup. Of course, fine, we had the big DOC spread that was taking place. Gosh, even if we go back, I don't want to shrink the chart much more than this, because if I do, what we had was our white line set up from back here, and we had a couple of other levels that had started before. So even when we had this pop, I was talking about and showing you how as soon as it got to these elevated levels, it was a perfect opportunity to expect to move back down to the 70s, and then when we broke the low, we ended up with a new one setting up down here at the 64 range. So that any spike above that was going to become a wonderful opportunity to attack as well, because of the expected retrace. And of course, the other day, if we go back to here, I was talking about how at this point we were expecting to go back down to the lows. We did exactly that, made new lows, in fact, doing it. And then on the beginning of an attempted return, we produced the white candles, and then started to get overbought. And pretty much that left us with soft retraces to the 50% range, but still pretty much maintaining. It was interesting is to get a white candle all the way at the peak. And so what for me I did was right here, as soon as we got the the gold, which was above the 50%, so we were expecting first to go to the highs. Of course, at this level, you're already at the highs when you get a white candle. It's not much of a retrace. It was the one down here at the 64 range that was going to be more interesting, because once I got the Azure rising, which happened right there, I was looking for any excuse at that particular point to short and started to take advantage of it. Where did I get? I think it was right around that 77 range. Immediately jumped on, 77.50. And so it just immediately jumped on those because we had the slight DOC spread. Even though it was closing, could have had a little bit more of a high improvement, which it did end up doing. What did we get up to? 80. So a couple of 2 points. And boom, then the bottom starts to fall out. And once that happened, it was pretty straightforward from there with that expectation, because I don't want to trade out of much of it. The best you could do would be to let go of some of it at the 50% range. Of course, that happened relatively quickly from the beginning of the move. And with the full target, though, from 77 to 64, you've got a nice built-in, 12 to 13 point range right there. No reason to do anything prior to that. And of course, once it happened, we could see here that we were just in continuation with no orange reset. And we had effectively reached this point where, and I've talked about this before, where the steel rises above in that, and you become long-term downtrend within this configuration. And that's exactly what's set up, and we ended up with another white candle. So this level will move down to begin right there. So we'll see if we get a pop that goes past that, that's able to sustain stuff. We can already see, though, two candles, not even at the 23%, already getting yellow extremes off of the nice reset from super oversold, the normal bounce back. But this is a significant amount of pain for people to weather, so that's going to certainly have a broader selling impact when the market opens, but very clean as far as the DOC spread. And then even after the initial breakdown below the 50, we could see that we had the continuation with the dark red move, and then once the white candles popped in, there was no question that was going to have a little bit further to fade. Now we're seeing a blue one, so this is the bullish run within that overall bearish setup. Usually look for those to go to the 38%, but if it gets overdone here, even before the 23, it potentially becomes an add-in point within the broader range. So all in all, good stuff. Love to see the signals come in this way, and certainly looking forward to getting you those exact updates so that you'll be able to see how this plays out over time in an effective way. As always, look, trade well, and we will talk later.